You're listening to AI Prism from Seoul Economic Daily.
It's Friday, May 15th. I'd like to share some thoughts about stock investors. Why is a humanoid robot doing a handstand suddenly threatening to pull capital away from the world's biggest memory chip producer?
Yeah, it's a massive shift. I mean, if you were watching the KOSPI right now, you are seeing this violent rotation beneath the surface. Capitals is basically fleeing a historic labor crisis in the tech sector.
Right, and pouring directly into physical AI. Let's start with that vulnerability at Samsung Electronics, ticker 005930. They are initiating a warm-down procedure right now because over 43,000 workers are registering to strike.
Which is staggering.
It really is. And I've heard a warm-down is kind of like putting a high-speed factory into a medically induced coma. Like you can't just cut the power without destroying the wafers inside, right?
Exactly. It's a highly delicate operation. You have to carefully halt new inputs just to save the equipment. But doing that immediately breaks the continuous layering process required to manufacture HBM.
High bandwidth memory, right. The chips, crucial for AI servers.
Yeah, those exact ones. These aren't simple chips. Stacking them requires precise, uninterrupted thermal cycles. You break that cycle and, well, your yield just plummets overnight.
Wow. And the financial hit is enormous. Projections show potential direct losses exceeding 100 trillion won, which is roughly 74 billion USD.
It's a massive blow. But beyond the immediate balance sheet, a strike of this magnitude hits a much deeper structural nerve for the market.
Right. It strikes right at the heart of the Korea discount.
Yes, exactly.
For those newer to this deep dive, that's the persistent undervaluation of Korean equities due to perceived geopolitical and corporate governance risks.
Right. And foreign capital already applies that chronic penalty. So when the literal backbone of your tech ecosystem proves vulnerable to a sudden supply chain halt, that discount just solidifies.
Investors just price in higher operational risk and pull back. But here's the thing. The capital isn't leaving the market. It's rotating.
Right into robotics.
Yeah, and this is where I'm slightly confused. Hyundai Motor, ticker 0053A0, just hit an intraday record of 710,000 won, which is about 525 USD. Why is a legacy automaker suddenly absorbing all this fleeing tech capital?
Well, because the market isn't pricing it as a car company anymore. They're pricing it as a robotics ecosystem. Remember, Hyundai owns Boston Dynamics.
Oh, right. They recently released footage of their new Atlas humanoid pulling off a seamless full-body handstand.
Exactly. And that signals a pivot from a pure R&D project to a commercially viable product. Traders are aggressively front-running a potential IPO here.
Which explains the surge in their affiliates, too. I'm looking at Hyundai Mobis, ticker 012330, and their software arm Hyundai AutoEver, ticker 30795. Both are just rocketing up.
Yeah, the underlying math driving this is super aggressive. We're talking about projections of 1.5 million high-end humanoid robots sold annually by 2035.
That is huge.
It is. As digital AI processing faces bottlenecks, like the Samsung strike, the speculative momentum is shifting toward physical AI implementation, moving AI out of server racks and into actual factories.
So tech giants are stumbling, robotics are booming, and amidst all this trading volume, the brokerages are quietly cleaning up. Mirae Asset Securities, ticker 006800, just entered the quarterly 1 trillion won club.
Right, which is north of 740 million USD in net income.
Yeah, that's wild.
And actually, the top 10 Korean securities firms saw their Q1 net income jump 114% year on year. But attributing this purely to high trading volume misses a massive structural tailwind.
Which is what? Korea's recent pension portability reform.
Precisely.
Wait, how does letting people move their retirement accounts juice brokers' profits this heavily?
Think about the mechanism. For decades, Korean retirement money was parked in highly conservative bank-managed accounts. But the reform removed the friction to move those assets.
Ah, I see.
So now workers are shifting capital en masse into actively managed brokerage accounts so they can chase these exact KOSPI rallies. The brokerages aren't just skimming transaction fees.
They're absorbing a generational wave of fresh, sticky liquidity. They're essentially capturing the capital that is funding this entire physical AI boom.
Exactly. And it brings up a really compelling question for anyone trading these markets.
What's that?
Well, if domestic pension money is finally flowing aggressively into equities, providing immense internal liquidity and driving new sectors like robotics, could this internal momentum be what finally breaks the Korea discount?
Even if foreign investors panic over Samsung's labor woes.
Exactly. It's something to really think about.
That's today's AI Prism, Stock Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.